Okay, guys, in this video, we will be sharing with you some of the top lessons from these 5 stocks, real life case studies that you definitely need to know. We don't own any shares mentioned on the slides. And of course, not financial advice, guys. You should know that by now. Now, guys, if you're really interested in building a 6 to 7 figure portfolio, we've got the perfect solution for you. Head over in the comment section or the description to sign up for our free masterclass where you can get all these proven steps to achieve it. All right, company number 1 and lesson number 1, we are going to talk about Parkson Holdings. This is a company that you probably heard before. Right? They are in shopping malls. They are famous for selling just about anything. And they are near and dear to every 90s kid's heart, right? Because that's where you got a lot of your stuff. That's probably where your mom or dad bought you your birthday present. It's also the place where I got my ties. So yeah, something we're all familiar with. But as you can see, down 98%.
Yeah, this company used to be a billion ringgit market cap company. Used to be a darling to retail investors, but unfortunately, because of innovation, technological shift, I believe they didn't change anything also. So that's why their business got hurt a lot. If I remember the statistics on their top line, the sales part, I believe it was still okay. It's like growing. However, the cost side of things, I think brick and mortar, there's a lot of costs. There's labor, there's your inventory, and lots of other minor stuff, your utilities and whatnot. So all of those actually eats up all of their profits, their margins. And there even some years, I believe there's like loss making because of this. And they are not really standing out against their competitors that can publish or even be sold online.
Yeah, I mean, Amazon, right?
Yeah, exactly. So, yeah, I think this business, if you plan to invest in a company like Parkson, right, you need to know that whether have they been following the trend of changing their tech, making their business more efficient, cutting costs and whatnot. I mean, you can see how Padini runs their business. So far, he has been pretty well run. I mean, the management, even though it is still a brick and mortar, but they managed to like find ways to actually manage costs very well. And hence cash flow and profits.
Of course, the difference with Padini is that even with online stuff, online buying and selling behaviors, people still want to go to the place to try it out, right? Yeah. But Parkson is not just clothing. There's a lot of other stuff. Right? Today, Parkson is, you know what's Parkson? Or even Isitan, I would say. It's just the place you walk past to get to your point.
Yeah, exactly.
Right? So you imagine like Parksons and all that, they are very strategically bought where, you know, if a lot of malls in Malaysia, you park your car, there's a good chance that you will step on an escalator into a Parkson or into an Isitan, right? It's so strategically placed, but yet you don't care. You just
yeah, exactly. I mean, I remember I always like go to a pyramid, right? Yeah. And because I want to go to like Go Noodle House. Yeah. So the place that in the bus is Parkson.
Wang Tama, same thing. So that's how bad it is. And I think that you can't really fault management for this change, obviously. But I do think that some criticism can be put on them in not going gung-ho into the business. I think one of the key aspects of being a good operator is to realize when to invest, when not to invest. So case in point, of course, we go back to Warren Buffett, right? Warren Buffett in the 60s, he bought Berkshire Hathaway. So Berkshire Hathaway was a low innovation business that was about to be disrupted.
Yeah, textile business. Right?
Yeah, they were doing textile stuff, but you know, America is not the cheapest place to do textile. You know, you've got so many other places that do it better, cheaper. And what a lot of his CEOs or the people at Berkshire at the point in time saying, hey, like maybe we should automate, maybe we should you know, buy new machines, spend more capex on it so that you know, we can be more efficient, whatever. But Buffett eventually basically said either no or like only yes in a small way, because you just can't beat the costs abroad.
Yeah.
Right? So in order to maintain some sort of margin, he greatly reduced revenue. You know, the joke is that you can sell a lot of $1 for 90 cents. You will sell a lot of it, but you will lose money.
Yeah.
And so similarly, Parkson is in that situation, right? They are still continuing. They think that the way forward is to revamp. I just saw in, was it Pavilion? They have I think they call it Parkson Elite or something like that.
Okay.
Personally, that's not how I would go about it, because what I would do is I'll just slowly divest it out. And they've got a lot of land, which is the biggest bull case for Parkson right now, is that they have a lot of assets.
Right.
And I would try and find ways to unlock that or do something different.
Right.
You got a lot of land.
Yep. That's one thing. All right. So the next one, it is about Moat. So I believe the glove industry has been, there's a lot of downwards pressure in the past 3 years, and Moat actually played a very crucial role. So why is that? Is because we see a lot of players who actually enter into the industry without any friction.
Yes.
So it's very easy to set up a glove business, even though you are a property development company, or maybe even you are other business that is not related to glove. So there's actually no special barrier to entry to protect that industry, because essentially everybody can do it lah. And that is what happened to not only Top Glove but other big glove players in Malaysia. And yeah, so you need to know that if a company does not have a strong moat or a growing and widening moat, essentially the profits will be definitely be hampered, and also not only profits, your top line and everything will be destroyed. Yeah, I think that it's about it. When you don't have pricing power, your business will be quite difficult to handle competition in the future. So any thoughts?
They had some form of a moat in that only this part of the region is very conducive for doing rubber products, because those are rubber plantations, where Malaysia came in and value added, in contrast to, at that point in time at least, Vietnam, Thailand, all that, is that, of course, we're an English-speaking nation, and also that we value add in terms of efficiency and things like that. But eventually, things like that will also get caught up. And so it doesn't mean that, Top Glove will always be a bad investment. I've made money on Top Glove before as well. And ultimately, you have to be more careful with companies like that. You have to time yourself a little bit better. A lot better, actually.
Yeah, and especially those that can manipulate average selling price in a short period of time.
Yeah.
So those are the things that you need to take note of.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description.
Okay, the third one we have here, it's management. So this is a little bit difficult to foresee.
Yes.
Because it's a very sudden case. But fundamentally, of course, if you study about revenue, which we did in our past videos, right, you'll notice that their average selling prices for their EDC terminals are actually dropping. So their business is actually not really doing well because of competition as well. And then you have recently we have the Apple Pay. You can just use your mobile phone and tap. You don't need an EDC terminal anymore. So that is one of another thing that can potentially crush their business. And okay, so now going back to this management issue, right? Okay, how can we actually foresee this? Is there a way?
You can't. You can't. But my favorite way to find good management is to find a good business. Okay, the way I come to that conclusion is, when management wants to siphon money out, okay, if they have bad intentions, it's usually because the business that they're running is not good itself.
Right.
You know what I mean? When you have a good business, cheating is less profitable. And of course, in revenue's case, we know beforehand that it's not the best business. But honestly speaking, the management part is very hard to do it. But you can know. You can ask yourself like these terminals, right?
Yeah.
That they use. Are they the only one doing it? A, B, can they be replaced?
Yeah. And I believe that, okay, maybe there is a one obvious sign, which is the CFO. When you see like their financial officer is like leaving the company, I think that's a telltale sign about it. And I think another one is more, I'm not sure, maybe this is my personal preference. It is I don't like management that over market themselves to the public.
That's true.
Yeah. I prefer actually management who are very secretive, conservative, and
with the occasional appearance, because we still need to learn about them a bit, right?
But they just let the business do the talking the numbers and everything. Yeah, they don't need to really tell the public how great their company is. So yeah, that's management for you. And then the fourth lesson that we learn is about accounting. So Serba Dynamic, I think this company has not been taught already.
Yes.
Because it has already been discussed so many times in the past already. So right now they are at 2 cents. They used to be around like a billion, also another billion ringgit market cap company, and they are down 98.5%. So I think this one is the one that teaches us to study accounting, right? To actually read about the cash flow statement very properly. Because I believe like I know you guys start to preach about operating cash flow a lot.
Yeah, because
before this incident even happened.
Oh yeah, that's true. That's true.
But then when I see like other investors, right, they only talk about revenue, profit, and net cash. That's it, lah.
Yeah.
So I think this is the one company that teaches us to look at every single financial statement very.
I mean, people teach operating cash flow also, but they don't explain why. They don't explain some of the peculiarities, right? Because some of you may not know this. Before 1985, there was no cash flow statement. Do you know that?
Yes.
Right? And people only rely on the balance sheet and the P&L. And for those who are a bit more expert, you actually know that you can actually construct your cash flow statement from your P&L and your balance sheet alone. But that's very technical stuff. It's not simply that you need to know how to read a cash flow statement. It's also to understand why the need for it and what the difference are between operating cash flow statement or cash flow statement and the P&L. The P&L is not useless. It's just misleading. That's it.
Yeah.
It just tells you
on paper.
It just records what it needs to record.
Yeah.
It records things based on a certain human created rule. It's not as simple as the cash flow statement where it's just in, out.
Yeah.
And even then, right, with the cash flow statement, by and large, you will agree, right? If it measures that cash coming in equals good, right? But that's not always the case because the cash coming in can be in the form of debt, right?
Right.
So, but it's a simple rule, right? Cash flow statement is just what goes in and what goes out. That's it. Now, with Serba Dynamic, the key thing was this, and why it was something that really caught a lot of people. Number one, they have some of the nicest looking P&L. Very, very smooth, growing. So that's one. Okay. Partially, the quantitative side looks good.
Yeah.
On the qualitative side, there's a lot of stories of them getting contracts in the Middle East, and stuff in the Middle East is going to be a lot bigger than what Malaysia is, and of course a smaller company like Serba Dynamic. But the big difference was that they weren't collecting the cash, and the way you guys can track this is just to measure the free cash flow of the company versus the net profit. Over time, not in that single year or even 2 years, but over time, over a period of 5 to 10 years, it should be roughly the same. What was very worrying for Serba Dynamic was that the operating cash flow, not just the free cash flow, the operating cash flow, which is even more crucial for it to match profits, wasn't
I believe it was around like 10% or less than that against
that
the
is
net profit.
Highly dangerous. At 50%, it's already dangerous. If your operating cash flow is consistently at 50% of your net profit, it's not good.
Yeah, and also I think it depends on the industry that they're working in. So oil and gas one, it is a more concerning factor. If let's say you are not collecting cash, instead you're just getting like invoices, papers only. So, but if let's say you are serving a reputable customer, so for example, like big brands like Nestle or whatnot, you help them to distribute products, right? Sometimes you may not collect the cash upfront because they have the power to say so. But if let's say those are companies that are big enough and you know that they have the ability to pay you, then I think that is fine. So that's another aspect, a qualitative aspect that you may want to look at.
So with Sabah Dynamic, it's not per se that they have a bad business. So for example, their maintenance, operation stuff, it's not too bad. The problem is the over-promising.
Yes.
They're saying like, look, we are here. But if they just say we are here, no one would have any, issues.
Exactly. And that day, I remember also they saying they want to go to space. The first Malaysian to go to space.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive.
And the last one we have here is Zero Catalyst. So I believe the retail investors will pay attention to this a lot because of how much it had went up.
That's crazy,
in a short period of time. Yeah, and it also went down. It's like a roller coaster, going up, then go down. So this is Computer Forms Malaysia Berhad. So their business is actually very simple. They do this printed invoices, paper, and then mailing also physical paper. I don't know how their business is still surviving. So that's actually a very surprising case for me when I find out about this. But yeah, essentially there's actually no catalyst around this company. I tried to like read, can't find anything. So the only conclusion I can have is that people are just playing around this company lah.
It's a goreng.
Yeah, it's a goreng. So anything you want to add on this company? Or is just as simple as goreng, that's it?
Yeah, always try and figure out why like prices are moving. Don't just say, oh, it's moving up, so let's
hop on the train.
No, it's okay to hop on a train or a stock that's going up a lot if you feel like it's justified, right? It's not necessarily false that if a company went up by 30% a day or 2 days in a row, that you have quote unquote missed the boat. Because someone might think, the public might think, oh, it's going up 30%, but it could go, like in terms of fundamentals, it could go up 50%, right? And so they have judged the growth factor. But be wary. Most of the time when you see companies with spikes that are so quickly, it's generally never a good idea. And some stats, I need to update this, but last time I did a very, very rudimentary analysis on the different companies in Malaysia that grow their share price. It takes 3 to 5 years for the average company to go up by 100%. Or rather, yes, correct. More than 70% of companies that go up 100% happen within 3 to 5 years.
Right.
So what does this mean is that if you find a company that goes up, like 100% in less than a month, well, there's a good chance that it is not sustainable. But it's still possible for it to go beyond 100%. It's just a lot less likely. That's it.
You just need to find what is the hidden catalyst
that's
behind the share price pump. So yeah, that's the 5 stocks and 5 lessons for today's video. Before you guys go, we have here our FIRL Pro stock performance for February 2023. You'll be seeing our March 2023's performance very soon.
Yep.
Yeah, and so far it has been on the green. I believe the March one also will be more or less the same, but I believe there's like 1 or 2 companies in the red right now. And if you look at the bottom, which is the Telegram stock performance, so those are companies that we cover for our Telegram members.
Yeah, it's not inside the FIRL
Pro. Yeah, and it has like a short-term catalyst that we can capitalize on. So those are the things that we also will notify our Telegram group members about it. And if you're not convinced about FIRL Pro, you can check out our free sample. So the links to this free sample is in the description and comments down below. And MJ, any final words?
All good, guys. Okay. Thank you for staying all the way up to the end. Go check out some of our other videos, and I'm looking forward to seeing you in the next video.